Some dreams are big. Some dreams are small. Some dream to go from place to place. Dreams of love and ever after. Dreams and sacrifices that builds the future. Whatever the dream or step or journey, you can do more with a partner that cares about your dreams. Access, more than banking.
Malam, on this platform, we have taken the time to promote seemingly insurance stocks. We've said they are profitable. We've said their prices are low. We've said they are coming up. But you see, at the end of the day, you are an accountant, an analyst. The whole thing has to do with analysis, figures. From what we are seeing here, Malam, incidentally, you have access to some of the figures here before now. Looking at, let me tell you the figures you will be seeing on the screen. They include the current price as at Friday, 23rd July 2021. And then you will also see the PEG ratio. Then you will see the Q2 earnings growth rate. If you look at the company's earning for a period of like 5 years, you can actually find the average earnings growth. So most often companies operate within the limit of what they had always done. In few occasions, there are departure, but often it is always short-lived. So if you are able to get the average growth rate, for you to get the PEG ratio is not going to be difficult, technically speaking. PEG ratio, when it is lower than 1, is good. Anything above 1, most international traders will not even touch it, all right, except if they have other superior information. What we also did in these figures, the table you will be seeing on the screen, was to capture the first quarter earning per share for 2021. And then you will also see the second quarter earning per share of the companies for COVID year 2020. And with all this, what we did is to now calculate the expected earnings for their second quarter 2021. That is what we mark with red. It is not that it is negative, but we just have to differentiate the numbers with the other numbers in green and in figure. We did the price in green. And then we also did the PE ratio expectation based on the expected second quarter earnings and then the current price. In other words, if you are making use of this kind of information to invest in such equity, and then what the PE ratio is going to be. PE ratio is the relationship between the price and earnings of a company. Technically speaking, it tells you the number of years. If the company was to distribute all its earnings to you, probably as dividend. Most companies will not do that anyway, but the number of years it will take you to recoup your investment. So in Nigeria, often people like Malam will say at least 10. But here we are looking at the possibilities for the second quarter. So what you are going to be seeing there are the expected PE ratio after the release of the second quarter results. And any EPS yield, that is the relationship between the current price, what percentage of the current price is the earning per share. So the higher, the better. The other time, Aruna and myself were talking, Aruna says that he has a target a consideration in his portfolio that any company that does not report at least 10% any year is not going to consider it. That is its own standard, and every organization have such rules. You must also have the rules that guide you. Now, having taken time to explain this, Malam, looking at this figure, all right, as analysts, I can bring out AECO, because it is not all of them. We are going to do a lot of argument too.
Yes.
A lot of argument.
Noted.
All right. Now, I could see AECO. I could see LASACO. I'm not necessarily recommending, because there are some other factors that could determine your investment decisions other than figures. That is the gospel truth. You might just be interested. Your uncle might be the managing director of an insurance company that is not doing well, and you just want to support the business of your uncle. And you go to buy, and because the prices are low, the price could actually rise. All right, but we are talking about secured investment. We are talking about the kind of investment so that when your child wakes you up in the middle of the night and asks, Daddy, Mommy, why are you investing in social equity? You should be able to tell them the reasons beyond every reasonable doubt. I can say AECO, now based on these figures, profitable to invest in. Anything can change tomorrow anyway. LASACO, profitable. Regency Alliance, profitable. Sovereign Trust Insurance, profitable. Mansard, profitable. Mutual Benefit, unfortunately I would have loved to say it is not, but it is based on this figure. And then Prestige, all right, from what figures? But so many others, they don't even come near. Malam, what will be your response?
Well, my response is that if you go to the developed market, insurance company, they are the leaders of the investment. They own banks, they own pension fund, they have asset management, they own so many things. When you talk of the capital market, we don't have the case in Nigeria. But of course, when we look at it, recently, 3 good insurance companies have merged into one. Everybody know of Metropolitan Life Insurance, ARM Life Insurance, and now Rockview. They were all acquired by Tangerine, and they are still looking for more.
But they are not listed on the NGX.
Well, what we are saying that they first have to gather before we expect them to come. My concern is that the other insurance, they should take the cue. Definitely sure there is going to be a dramatic change in the insurance companies. And today, we have seen it. Even by the pension fund insurer, PENCOM, they insist every company that contribute in the pension must insure their life of their staffs. The contribution of the life insurance is running into trillion. This was nowhere to be found before. Today is now going into the coffer of these insurance companies. Now the government is insuring their own staffs, the federal government and the state, as well as the properties. Therefore, the insurance are getting back to their position, and I can be rest assured, irrespective of the technical analysis, the PE ratio, and the previous rate of growth, insurance will change.
Malam, let me tell you why I said there is going to be lots of argument here. A couple of years back, to the best of my knowledge,
Yes.
there was this separation of operations among the insurance companies. One, most of them that are listed on the stock exchange, if I'm not mistaken, basically have their life separated. For example, I know that NEM doesn't have life business. AECO, I know they have life. I don't think LASACO has life. I don't think Cornerstone has life. Consolidated Hallmark, I don't think it has life. I don't think Linkage has life. I don't think Regency has life. I don't know whether Veritas has life. I don't think Sovereign Trust has life. I don't think Suno has life. I don't think Mutual Benefit Prestige Universal doesn't have life. Very many of them will still now begin to struggle because all that you have taken time to analyze will benefit more life assurer insurance company.
Let me tell
and
you.
not this normal.
Those insurance companies that are into general, they have no choice than to go into life. Because what make
But,
life,
madam, let me
what
just-
make life less attractive before,
Yes.
there is no enforcement. People are not willing to insure their life. Now there is enforcement. You cannot pay contribution. Pension contribution is running over 12 trillion.
But, madam,
and all those that contribute must have their life insured by the contributor.
we know, but see, Malam, I cannot be using factors that should make me invest in life insurance companies and then bring it to bear in general insurance companies, because before they will begin, let me tell you, and I'm not going to use any name, all right? Do I say this? Let me say this, because I'm not going to be mentioning any name. I am an investor in a life insurance company. You know the company. You were also involved in it. And at a time, we began to look at it because they have not really done well since 2008 when you and me invested in it. And in the process of time, we're even looking at the possibility, shouldn't they even sell the license or merge with another, right? So, and a general insurance company approached me that, do you have information about this organization? I did say yes. At the end of the day, I was trying to organize a meeting for them, but they disagreed. In other words, the process of acquiring, right, a life business is not just going to be at the tip of the hand. It is going to take a lot of negotiation, renegotiation, valuation, revaluation, evaluation, analysis, agreement and disagreements. At the end of the day, do you know why the other general company eventually did not take any position in that insurance company? Most life insurance companies in Nigeria, as of today, to the best of my knowledge, to the best of your knowledge too, are carrying a lot of debt on their neck. A lot. Because you see, this is all about actuarial thing. So they have a lot of weight, and most general business insurance companies would rather remain in their general business instead of going to put their head into a highly indebted life insurance company, or they start their life business from the scratch again.
No,
And
the
which
trend
will take
have
time.
changed. Let me tell you, in the past, most of their money, even where they go for life, the money end up with the brokerage. And you will find that they hardly, the insurance brokers, they hardly remit it to the actual company.
Right.
So until there is a death, then they start rushing. Things have changed. The rule have changed. No cover, if you did not have a cover for your this thing, there is no liability for insurance. And this pay, most of the company directly pay into the insurance company. Don't forget, most of this life insurance is for just per annum. You insure your people just for 1 year. Thereafter, you have to start remit. And therefore, they are accumulating money now, and they have seen that the rate of death is less than 5%. And therefore, they make more money onto it,
Yes,
because
Mama,
the company paid directly into the company, and the company were guided where to invest their money. Don't forget, there is more instrument now by the federal government school, by the federal government board, where they can invest and earn. Before, there wasn't. Most of their money, they invested them where they couldn't even recover their money. Things have changed, the rule have changed, and therefore life insurance is a key. And most of those insurance that going to see the light in the very near future are those that have life.
Do you know from what Malam and myself have been arguing in the last couple of minutes now? What I can bring out from it is very simple. For you to stake your neck in any insurance company, make sure that it is an insurance company that has first a very solid general business and life business. All right, Malam, I'm going to draw a conclusion. Or you will say yes or no, whether you agree or not. Well, in the interim, when you see an insurance company that is just into general business and they have not come out openly to talk about their life business, maybe they are interested, maybe they are entering into an agreement, you should be wary. But when you see the one that is into life business and general business, you can close your eyes and invest. Malam, am I correct or wrong?
Yeah, very correct.